Good afternoon, traders, and welcome to the Blue Line Metals Edge here for Monday, August 15th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. You watch this on YouTube. We appreciate it if you like and subscribe. And then if you need additional information, go to our website, www.bluelinefutures.com. Click on Research, and then you'll see you can also register for a 2-week trial on this report, as well as the Morning Express and a number of other different reports that we put out that cover all the different commodity markets. Now, if you're looking at the metals here today, a lot of action, a lot of red on the screen across the board in most of the commodity markets. It was really led by crude oil prices falling about $4.50 on its lowest level here. You could see down $3.24 on the December contract, September contract as well. Looking a little bit weaker, down $3.69. So you could see if you look at that September contract, kind of been stair-stepping its way lower, but it is making lower lows. Where you go to the December contract, that's the one that I've had a more favorable experience trading here recently because of the fact that it's got more sideways. It's a channel, so try and buy at the bottom of the channel, sell at the high end of the channel. But you could still see that it has been weaker here. We believe that demand will remain firm, that supply will also remain constrained here. So, but getting into the wood of things, you had no major economic data here from the U.S. today. That starts tomorrow. However, you go into the big mover and big headline here. It was this industrial production figure that came out for China. Big miss, 3.8 versus forecasted 4.5%. You could see that it was just a big number, big declining number on what was anticipated. Forecast was up at the top end of that. So if we see this continue to weaken and dip down and they just can't recover at all, you're going to see a softer commodity demand picture here just for the short time being. And if you look at a lot of these markets like gold, I indicated this on Friday that the old support becomes new resistance and we're starting to fail. And actually we got a pretty sizable breakdown here today on the gold market, pulling back about $20. You can see that we're failing back below the 50-day moving average. Stochastics coming out of overbought territory. Not a good sign. And you don't want to see these two converge as well. Now, one thing I knew was that my trading system here, that it would end up on a long on Friday. And here's what it bought: 18.15.50. The sell trigger's down at 17.66.20. That's your protective stop is. That's a suggested stop, but I would have one much tighter here. I would really focus on this low. If we take out this low on a closing basis, I'd probably be out of that market because you don't want to write it down any farther than that. Then getting back into, we do have some swing trade ideas and some probable ranges. However, the probable ranges work great when there's not a lot of noise out there in the market. They tend to be very accurate. We use program and algorithm for that. But when you get these market moving headlines like China cutting rates on an emergency basis, you're going to see that it's going to reflect on almost every commodity. So here's your futures performance for the day. Cotton's the only one lock limit up. Everything else down, a couple percent on the day. So these are sizable moves, basically from nat gas going downwards. Crude oil being the worst, soybeans, all heavily dependent on China. Platinum, silver, palladium, copper, oats, all these are just direct links to China. We saw the crowding analysis. We saw commitment of traders, now the net position back to 52,797. I got to think for a strategy, if we see this dip negative again, I don't know when we will, but if we do, that might warrant some longer dated call options, call spreads, things like that. Looking at the silver market, same thing, possible head and shoulders. Here's that first shoulder, here's the head, and now we're starting to go down. Come back down. That's your critical support level. The market is long on it, depending if you got in September or December. 2076 is the long on the August 8th settlement. 1955 is where that stop loss would be. So looking back at it, going to silver on December 1955, that would put us down right in this range right here. So you could make it a little bit tighter, bring it up to one of these two levels here, but that's how I would trade it. Going back to probable ranges again, when you get these volatility events, it's going to widen out. Also, net position still not short on silver. Managed money is. We'll see this. This will probably come down just a touch. That spread, and then also copper market failing at the 50-day moving average. The system's been short on copper. You can see right here we failed at the 50-day. Now we're breaking down. We're going to come out of this overbought territory, and this could be a breakout to the upside. So that signal right there on copper, you want to be a bit cautious. It's flat right now. It probably won't trigger the short, probably won't trigger the buy. It's going to be sideways to lower action on copper. So the lower boundary of probable range and upper boundary pretty close. And then on the net position, they're net short copper. They've been building a short position on copper for a while because they think that the global economy is headed lower. Here's your platinum. I indicated that this may be overbought, maybe due for a correction. For some of you that got out of platinum on these highs, you had some fill triggers come in on the sell-off. Nice little breakdown here. Some people got long in the 920s. And they'll probably build the position down to about 900. So we'll see where the stop should be. They've got it down at 875.10 on the stop. So, you know, and we're right at support right here. They were up 1725 coming into the day. Key levels of support, we've kind of broken all those today. So you're going to want to watch out. There is a lot of buying going on. Still the net speculative position for managed money is short, but I think that they'll continue to cover it. This is the reason why equities are starting to rally. It's because we dipped into this lower growth, lower inflation. You can see it's not low inflation, it's just declining. Same with growth. So we're in this bit of a Goldilocks phase. We will end up seeing, I think we'll have multiple quarters where we're in this deflationary environment going forward. So if you're talking with me pretty closely, we did pick up some put spreads in that market. Updated the Fed Watch tool last week. This was 74. This was about 34% where we had that weaker economic data, and it jumped back and forth. So almost 50-50 on whether or not they're going to do a 75 basis point rate hike or a 50 basis point rate hike. So you want to keep an eye on that. Keep an eye on this chart. It's you go to Google Fed Watch tool and bring it up and bookmark that. That's a great one. And then you can see the dollar coming up pretty strong. So that is also, remember, if China's cutting rates, you're going to get other countries that are cutting rates. Some countries are aggressively tightening rates, like the U.S. You're going to get these wild currency moves. So historically, currencies are relatively lower volatility investments, but not the case right now. Again, with the futures performance, you can see that it's just getting pretty weak out there. And then nothing else really to flag on these charts. Flag to crude oil, silver, gold, equity markets kind of coming back. I mean, we're actually breaking back out to the upside on it. Maybe they're thinking that the U.S. economy will have that soft landing, and other foreign stock markets will be much weaker. So, but if you need anything, give me a call, 312-858-7303. Might be offline tomorrow. I'm flying back to Chicago. I got a wedding at the end of the week. It's my wedding. So I got to get back there early and make sure that we make it there. So if you have any questions, again, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.